Hey, what's up, guys? It's Alex, and I'm here to recap day number 6, although it's not really because it's interesting or there's anything cool to talk about. It's just a matter of every time I take a trade, I will make a recap. And today I did take one trade. I didn't take any practice trades. I left my desk around 10:30, went to play poker for about an hour and 45 minutes, and proceeded to win more in that hour and 45 minutes playing poker than I have in the entire 6 active days of this account so far, which... I mean, yeah, it's kind of a good poker session, but at the same time, I think it speaks more to how dead things have been in the market lately. So my first entry on AVYA, as you can see on my trades window, was on this candle right here as we broke 1380, where there was a fairly large seller. And I took 250 shares, which is fairly light, even though the stock was expensive, a lot more than I would normally play. It was an anticipatory entry, so I didn't go too heavy early on. However, I did add after a pullback here. We pulled back to the VWAP and then started curling up. And then as we broke, or as it looked as if we were about to break $14, I took an add-on that I later decided was a horrible add-on with 125 shares at $13.98. And the reason I thought that was pretty bad because $14 was the level that I was anticipating the break of. So to not wait for it to break before taking the add-on, even though the volume pattern on the 1 minute was pretty strong, the price action was good, I was liking the situation on the stock, it ended up bouncing off of 14, which means that I could have saved commissions and a few bucks by not taking this add-on until after the break of 14. And if I fast forward the chart here, you'll see that it bounces off 14, comes back down, goes back up to 14, and my exit for the whole thing was on this candle here. Once it hit and rejected 14 for the third time, I saw a pattern developing that I recognized as a very, not a sure sign, but a very strong sign that the stock would reverse pretty hard. I wasn't super convinced that it would be done for the day or anything like that, but I did think it would retrace all the way past my entry. And I figured, let's just get out of this right now, take a bit of green, and then reevaluate later on. Now, given that this trade is pretty boring, I'm going to take this opportunity to go through the process with which I log my trades every day. Now, originally I had intended to wait for a trade with multiple entries and multiple exits. However, in order for me to have a trade like that, it has to be a substantial winner. And who knows when that's going to happen given the market we're in. I mean, it's definitely been really slow. I've never had so many no trades days in a 2-week period, I don't think ever. So I'm not going to wait for that period of time. And I think also it would be good to introduce the process on sort of a less intense trade. There's only 2 entries and 1 exit, so it's a pretty simple example to go through. Okay, so here we are in my trade log, and I've already filled out the 5 pieces of information needed for the general side. Quick note about the times. These are always going to be, the open time is my first entry and the close time is my last exit. We're not going to average them out like we do with price later. It's strictly first entry, last exit, which gives us the total hold time for the entire trade from start to finish. Now, as I mentioned in a previous recap, if the title up here is yellow, that means it's going to be an input that I'm typing in myself. If the title is black, it's going to be based on math that I've already plugged into this tracker, and that's going to auto-calculate for me, which you'll see right now. So in this case, hold time is a black title. It's going to autofill. So all we have to do to get that math the same down here is to click and drag. So it's going to give me all the information for the ones already logged, which I will clear out. And now we can see that there's no chance of making a mistake. The math for this particular one is close time minus open time, and that gives us a total of 9 minutes. Now next up are the entries, and that's where it's going to get interesting later on when I take a more complex trade. So just a quick note about the entry and exit calculator. It's the same concept as all my other trackers in that a colored title means an input that I put in myself, and a black title such as here in value or everything up top. That's something that's going to be calculated by formulas that are already part of the calculator. So in this case, it's a pretty simple entry situation. We always need 3 pieces of information: the shares, the price, and the commission. So my first entry was 250 shares at $13.84, and I paid $1.95 for that transaction. My next one was 125 shares at $13.98, and once again I paid $1.95 for my transaction. Now in this case, normally what I would do is just use these averages. You can see up here my entry average has already been calculated. I would just do this myself in my head, but for the sake of showing the tracker, I will put in the exit so that everything is calculated up top. So that was 375 shares at $13.99, and once again I paid $1.95 for that transaction. So now what happened is up here we've got all these fields full. Now you can see my total position size is 375 shares, which I've got down here. My average entry is 1388.67. So now it's time to plug in 1388.67 into here. Number of entries was 2, so I hit 2. And if we go back, my average exit, as we discussed, not too complicated, $13.99, and the number of entries required to get it was 1. Now we've reached a black title, so we just click and drag to get the math and delete the middle. And now we've reached a yellow input, so in this case we're going to type it in ourselves. Now the entry and exit calculator has spit out a total of $5.85 of commissions. So that's what we're going to plug in here. And now we've reached the last 3, which are all black titles. So once again, click and drag down like so, and then delete the middle. Now the reason we're deleting the middle, you probably figured it out, but it's because there's already information on the losing side. There's only ever going to be information on one side. There will never be both full. And that needs to be preserved in order for my accuracy to be accurate. Now, you may be wondering at this point, as I show you my entire trade log for 2019 so far in the simulator, you may be wondering, well, how come you don't just, go to the website and copy and paste all your information into the free version of TraderView and just do that? And the ultimate answer is because there is no such data. I'm using a simulator right now, and simulator data is not compiled somewhere else. There's no service to make sure that all the information is there. And this is very much unlike a live account where you do have that freedom to just copy and paste all your data, all your transactions, and then some sort of service such as TraderView will do all the work for you. However, when you're trading, when you're leading up to a live account, you don't have that. And I think doing things like this and practicing putting in the data yourself will open up a lot of windows of analysis for you, in that you'll be able to take a look at your trades and get more familiar with what you're doing. When you have to repeat the information, when you have to plug it in yourself, you'll notice things about the way you're trading that could lead to improvement, or are likely to lead to improvement. So in this case, we'll take a look at some of my stats up top, and I'll talk a little bit about what I like and what I don't like. Now, first off, 2 things I want to say are, number one, this is nowhere near enough data to make any kind of, rash decisions or huge adjustments or anything like that. But the second thing is that this trade up here, my very first in this account, this is going to be throwing off all of my averages for quite a while to come. And that's going to be a big part of the reason why I'm going to focus on separate time frames. For instance, these are just my trades from September. These are just my trades from October. And we'll be able to separate that even further as we continue forward. But for now, we're going to look at the 2019 results, which is every trade I've taken in this account so far. So the most important stat here is going to be overall accuracy. As you can see, my 7 winners versus 6 losers, not exactly something to be excited about right now. However, that's that's a reflection of the deadness of the market. A couple of times I lost patience. I could have closed a losing trade as a winner, and I did not. Which signifies a little bit of sloppiness. But more importantly is the position size versus entries and exits. This is something that I always pay attention to, no matter how small the sample size is. With every trade that I add, I'm going to be taking a look at this and trying to make sure that it fits within the parameters that I want. Now, what I'm looking for in both of these stats are for the winning average, that is my average on my green trades, in position, average entries, and average exits. I want all 3 of these numbers to be bigger than their losing equivalents. Additionally, I also want my green trades to be higher than my overall average, and I want my losers to be below my overall average. Now, in this case, I've nailed it on all of those counts all around. And the reason why I'm happy about that is because I want my losers to be one entry, one exit, which to me is very indicative of not getting attached to losers, of having really hard set stops, sticking to your plan. Things like this. This comes out in having a one entry, one exit loser. If I find myself adding to a loser, that's generally a sign of a real significant lack of patience or a lack of discipline. And even though I've made some minor mistakes so far in that area, I haven't had any major blunders. Now, the most important point of analysis out of any stats grouping, in my opinion, especially when you're trying to, build it up from a small balance, and all these small account challenges that are popping up here and there, hardly any of them talk about the impact of commissions. And I think that makes for a really unrealistic view of how difficult it really is. And I'll mention here for, those who may not know, my history in trading is one very green account where I had a great return. I ran it up from a balance of 1,600 and closed in the low five figures. And that was a great success. Now, in that account, I was using top of the line everything. I was trading under a friend's hardware setup. He had the whole 4 monitor. He had 4 processors, liquid exterior cooling, whatever. The thing looked like a spaceship. And the price tag on all of his hardware was something like $650 a month in tools. And his computer setup, his PC, was like a $4,000 or $5,000 ordeal. And even me right now, I'm trading with what I believe to be an above average setup, and even that may not be good enough. And I think that's probably the biggest thing that you have to take note of before you even start anything like this is, do I have the money to get the tools that I have? And do I, am I good enough to beat all of these expenses? And even me right now, I'm making a real concerted effort to demonstrate all this to be, if we open up my daily results here, you'll see I'm simulating account fees every month, and that's a big deal. This $124 on a balance of $2,000, that is a really big deal. And I think even now, even though it's a slow market, I've still made $50.35 in this account so far, and yet I'm down. I'm going to open tomorrow down $74 in this account. Well, why is that? And the answer is fees and commissions. That's what's cutting in. And that's been the story of the second account that I had, most recent one, in which I started with an even bigger balance. However, I didn't have a premium setup. I didn't have top of the line tools, and I didn't have a premium broker. And my result was I shut the account down before I got to zero. In my opinion, I was on the road to blowing the account up, and rather than actually fulfill that and go through with what the stats were screaming at me, I decided to shut it down and go back to the simulator, and that's where we are right now. Now, without actually opening up some old trade logs, which I will do eventually, but for now I just want to say that I think this grouping of trades right here, or even, this grouping of trades, everything but the first basically, is pretty standard for me. This all the data really looks a lot like how it did in the account I just spoke of, which failed. I closed down something like 68% in that account. And despite that result, I was actually up. My gross result was green in that account. And yet I closed it down, almost 3/4 of the way. And that really speaks to the impact of commissions. And so far, something that I think I've done right is I've pulled these types of results out of a really dry market. And in my previous account, in the live one that closed down, this is a lot like what my trade logs looked like. It was, not spectacular accuracy. I think I topped out at 69%, something like that. A lot of small winners and medium-sized losers. I was basically getting overrun by commissions at all times. And a big part of why that is because my share size simply wasn't big enough. And so far, it also hasn't been big enough. However, I don't really chalk that up as a mistake just yet. Once the market heats up and once we're seeing bigger runners, and if my position size continues to be this small, then I will consider that a mistake. But for now, this is basically A lot of these trades are just me taking a starter and then never adding substantially to it. I'm never loading up big positions as I would in a hotter market. However, if we look up here in the average gross P&L commissions and net P&L, I'm not going to do a math on it, but it's somewhere like 65% of my gross P&L is being absorbed by commissions. And that's before we even talk about account fees and, tools, anything like that. We're not considering any of that stuff yet. And yet I'm already losing 65% of the profit that I'm earning as a result of my decisions. And like I mentioned earlier, I think this is a really big failure that shines through in a lot of these small account challenges. Is I watch them, I follow them myself. I'm an avid fan of several, which I will mention later. And a lot of them say, on this short, for instance, they would have said, all right, I finished up $180. If I switch over to my daily results, for instance, be like, all right, I had a plus $150 day. No, you didn't. You had a $130 day. And that, that may seem subtle. From 7.92% to 6.9%, it may seem like not that big of a deal, but let me tell you, that will make the difference between a busted account and a long-term success. And so this is, a big part of my goal here is to be able to demonstrate the real, what it really looks like. And this is what it really looks like, And granted, you could argue that my skill set is not advanced enough to be trying something like this. But if my skill set isn't advanced enough to be doing this, well then how is my skill set ever going to be good enough to compete with 10, 20,000 of a balance? I'm Canadian, I don't have to deal with the PDT rule, but I'm very sympathetic to those of you who do. And that's a really big part of the reason why I'm using offshore broker fees, why I'm using the most expensive fees in the business, and why I'm simulating all these different things that are a lot less than optimal. Is because I understand that the PDT rule is a huge roadblock for Americans. And in order to get past that, you basically have to have 25, 30,000 to invest in your account, or you have to go offshore. And if you're going offshore, you're going to deal with, subpar brokers, and you're going to have to pay expensive fees. And that's a really big deal. I mean, you really can't underestimate it. Just in this small sample size, we've already seen that despite being up, I'm already repeating the same type of progress, or reverse progress, I guess, that cost me so much in my most recent account, which I did not have to deal with in my first one. Now, even though I am repeating a lot of the mistakes, or at least I should say I'm repeating a lot of the core stats, the numbers are very similar. As I mentioned, this grouping, this is a lot like what my entire history looked like in the 100 and so days of my previous live account. And on the one hand, that looks bad. It looks like I'm making the same mistakes. However, the key difference here is just how hot the market is. I was getting these types of stats in a really hot market. And in this case, I'm getting these stats in a really dead market. So in my opinion, it feels like these stats are predicting good things for once things heat up, as if like I have corrected the mistakes of my previous live account, and that it looks to me as though I've made the adjustments, or that I'm on the way to making the adjustments. Now, only time will tell. If these stats stay the same when we start having 50, 100, and 200% runners intraday, well, then that's going to be a really big problem. And that's something I'm going to have to address when it happens. Hopefully, I won't make those mistakes. I believe so far, given my patience and a lot of the corrections that I've made, that I will be able to prosper quite a bit. I'm not too worried about the fact, for instance, that I'm down $74 or whatever. All my profits been erased and then some. That doesn't bother me right now so much, because I know that there are hot times coming. And so basically, my mission right now is to just avoid any major mistakes in between now and the time when that hot market shows itself.